Morning traders, Nick Mastrandrea from Market Tea Leaves. So just wanted to talk to you briefly about what happened yesterday in the markets. Unfortunately, yesterday we had somewhat of a mixed market, if you will, because the Dow fell by 36 points, yet the Nasdaq and the S&P did show a gain. Now, you might be asking, well, Nick, what happened? You said yesterday that the market was poised to go higher. It didn't. What happened? Well, the market was poised to go higher. And initially it did. Case in point, let's take a look at the Dow. This shows a timeline of yesterday's trading action on the Dow Jones Industrial Average. Initially it did. It gained by 10 points and went from 1419 to 1429. Then around 10 a.m. something happened. And the market just continued to drop. It met parity over here at around 10:30, but then continued to drop and stayed lower all day long. Now, you might be asking, well, what happened, Nick? You said the market was poised to go higher. Why did it drop? Well, here's what happened, folks. And this is something that you need to be very much aware of. This is what happened at 9:56 a.m., just before 10 o'clock. This is the headline that people saw. U.S. retail sales growth slows after tax hike. Now, what the person was trying to say in this particular article is that because working Americans saw a 2% reduction in their paycheck last month, retail sales went down. Now, they also go on to say that that January showed a 0.1% gain, following a 0.5% gain in December. Now, I have to ask you folks, pragmatically speaking, what happens in December? Is there any significant event that occurs during the month of December that would spur spending, economic growth, people spending money, etc.? Could it be this thing called the holidays? Now, I don't know, but it sounds to me like there's holidays in December. And people generally tend to spend more in December than they do in January. But what this author failed to recognize and completely omitted was this fact. If we take a look at the economic report itself at 8:30 a.m., core retail sales, 0.1% was the expectation. It came in at 0.2%. It actually beat expectation, despite the fact that there was a paycheck reduction due to a tax hike. Completely and totally omitted it. Now, what did people see? What did traders see? Traders see this type of a headline, and what do they do? Not knowing any better, not realizing, the who, what, when, where behind the story, they headed for the exits. In other words, they bolted. And quite frankly, the individual who wrote this story, if you examine their background is technology and telecommunications, not financial markets. This individual is not even a financial analyst. But unfortunately, people don't realize that. They see the headline, and they go running for the exits. My point to you is very simply this. You need to be very cognizant and very much aware of these headlines as they develop during the trading day, because when you start seeing things like this is the kind of reaction that will occur. Just a little tidbit of information. Remember that most people out there are not traders. They are not professionals. They don't do market correlation. They don't realize, what it is that they're doing half the time. And quite frankly, they see a headline like that, they're going to run for the hills. And that's precisely what happened. Again, just a little tidbit of information that I wanted to relate to you. I hope this helps, and look forward to the next time with you.